Pull up a Home Depot chart right now because, interestingly, it is not the best performing name on the Dow, but it's definitely one of the best performing names. Look at this. Home Depot today is up 4%. It was one of the few that was down yesterday. Of course, it's very closely tied to the housing market, and it dovetails nicely with our next discussion about all these dire predictions for the economy and what our next guest says.
Yeah, we have heard all these dire predictions. In fact, Goldman Sachs came out with a prediction today saying that we are more likely to have a recession, but our next guest says not so.
John McCauley, special economic writer from Dow Jones Newswires, is in the newsroom. John, I know you've watched many a recession go by, and some not happen, some come to pass, but what do you make, especially when you look at a stock like Home Depot today, compared with the Dow, which is up 321 points, about the prospects or possibilities of a recession?
Well, I don't think we're going to have a recession. I think we're going to have a pretty pronounced slowdown. But first of all, we're going to get GDP revised up tomorrow, probably substantially. At Dow Jones, we're looking for a 4.9% number for the third quarter. It could be north of 5%. So it makes a higher cliff to fall off of, but I don't think we're going to completely collapse. I think we're going to see slower growth in the current quarter and slower growth in the first half of the year.
But if we see those revised figures going up, will we see more of what we see today on the Dow? That is, will the market react in an up fashion?
Probably not. It's perverse enough to think, well, gee, if it's that high, it's going to get lower. And in addition, it is kind of well behind us now, the third quarter. I think there's more interest in what's going on currently, but I think that the fact of the matter is that there's still slower growth, but growth.
John, let me play devil's advocate here. Some would say we're already in a housing recession, we're in a dollar recession, and that perhaps we're going to be in a recession to follow at some point. And these are some very smart people. I mean, you've had Alan Greenspan mention it in the past, and people at Goldman are certainly feeling negative about it. But what would really make it happen and make it a reality to have those 2 consecutive quarters of contracting growth?
Well, even that isn't a real definition. It has to be widespread, prolonged, and deep. And I don't think that we have enough out there to make it deep. There are a lot of things that are slowing us down. We've got high gas prices, we've got financial problems, we've got the housing problem, but unfortunately not every sector can be as healthy as some of the other sectors are.
All right, John, if you can stay with us, please. We want to bring in the views of our panel as well. And
we'll start with Mike Norman here. We also have Nicole Ridgway from smartmoney.com. And Rob Stein with Astor Financial, along with Peter Schiff, author of Crash Proof. Mike Norman, I'll let you take first crack at this one. John is saying really no recession in sight. Try and think objectively. I know you're a big bull, but what do you really think about a prospect of a recession?
I think it's very low. I agree with John. Look, even if we say, let's assume we're in a housing recession, contribution from exports alone, and I mentioned this in the other segment, more than offset the what housing took away. In addition, we saw a very good business spending and investment, and consumer spending was up there too. We just got an 8.3 increase Black Friday in the kickoff for the retail holiday shopping season, much stronger than anyone expected. Liz, I just do not see it out there. If we come down, and John's right, we're going to see a 1% revision to the third quarter, bringing us up to 5% in the third quarter. Incredible growth. Even if we see a downturn, you got to average those numbers. We're still running around 2.5%, which is decent.
All right, so Peter, you agree with both of our guests, right?
Well, I agree with none of them. I mean, first of all, I agree one thing: a recession isn't coming. We're already in a recession.
By what measure?
The economy is already contracting. You're looking at these government numbers. We're measuring our economy in shrinking dollars. The dollar is losing value. All these measures that purport to show economic growth, they're phony. You've got to look at reality. And the recession is going to get a lot worse. It's just beginning. It's going to be extremely pronounced and widespread and long-lasting. And in addition to a severe recession, consumer prices are going to head substantially higher. And so will interest rates. And that's just going to exacerbate this recession. We haven't had anything like this in our lifetime.
Okay, Rob, You know, my mother asked me an interesting question. She said, what would a recession mean to me? How would I feel it? Just so for people watching who've never experienced one before, what does it feel like and how does it affect an individual person?
You know, Liz, that's a great question because I think that is what a recession is.
All right,
when
Mom.
the average consumer, the average person feels that the economy is contracting, they feel that their job security is at risk, that they feel their financial situation might not be able to sustain their lifestyle. That's really what a recession is, and it boils down to jobs and job growth. There's never been a recession that hasn't come from lower employment data. We haven't had negative job growth on a month-to-month or quarter-to-quarter basis in a while yet. Yeah. And I can't see us heading into a recession when we're adding 100,000 plus jobs each month.
Hold on a second, Peter. Nicole, let me just think one positive thing of what you hear coming out of Peter, which is that it makes it much more difficult for politicians to raise taxes. It's one thing you don't want to do if we're heading into a recession.
That's true. Yeah, you don't want to raise taxes. I'm
looking for a silver cloud in Peter Schiff.
Well, the other guest.
Hold on, Peter. Go ahead, Nicole.
I mean, obviously, you know, a lot of eyes are on what the consumer is feeling and how safe they're feeling and what they want to spend and what they want to save. And taxes do play a role in that. You know, if they are paying more in taxes, they're going to feel like they have less money to spend. And we don't want them to feel that way if we want the economy to continue to grow.
All right. Let's take another check of the markets as we have to go to a break. Peter, we'll